Hi there, good afternoon. This is Halftime Report. We're halfway through the trading session, and what an afternoon this has been. The Nifty posting a triple century. We have the Sensex 1,000 points higher, and the Nifty Bank with a 4% gain. Right from the word go, we've been doing exceptionally well. I'm Mangalam Maloo. With me is Sonia Shenoy. Sonia, what an afternoon.
Absolutely, Mangalam. Hi, good afternoon. And if anybody would have told you on the first day of the lockdown that the Nifty will be 30% higher in a month, I'm sure you wouldn't have believed that. But here we are. Lockdown or no lockdown, economic damage or not, the market is just surging. I guess it's also because there's now some hope, right, that there could be a COVID-related drug that gets an approval from Gilead, and there's some treatment that at least the market, at least the economy is taking baby steps towards. So we all live in hope at the end of the day. So good day of trade. Also, a lot of large caps are leading the way forward today, similar to what we saw yesterday. So whether it's a Reliance Industries that's up about 2.5% ahead of its earnings today, HDFC Bank, Axis Bank, Bajaj Finance, all of these stocks are contributing to make sure that the Nifty stays above that 9,800 mark. But Mangalam, you and I have a very long day. I mean, we can't get into our long weekend just yet because Reliance comes out with its numbers later in the evening.
Absolutely, we will be watching out for that. But at the end of the long day is a long weekend. So that is something that will give us some sort of solace. But, like you said, good news coming from all corners. We have not only a hope of potential COVID drug, but also a fair amount of liquidity coming in, a promised liquidity coming in from the Fed, and good results coming in overnight from Facebook as well as Microsoft. So we'll keep an eye out on how all of that pans out. And today, of course, we will keep an eye out on HUL and big boy Reliance. At the high point of the day, good time to get tracking on all the individual news pieces that we're tracking this afternoon. Plenty of global cheer for Dalal Street. Hopes of a treatment for COVID-19 rise, and the Fed says they will do more if needed to keep the economy robust. Nifty reclaims 98.50. Global economy facing stocks like Tata Motors, Vedanta, Hindalco lead the charge.
And local and global pharma companies give rise to hopes of finding a cure for COVID-19. Gilead in the US says their remdesivir drug shows promise, while Biocon plans to repurpose their psoriasis drug for COVID-19. Glenmark too gets an Indian regulator nod for clinical trials for favipiravir.
Reliance Industries reports their fourth quarter numbers today. Refining business likely to be weak, while strong improvement in geo and retail business will continue. All eyes, however, will be on the details of the rights issue, which the board will discuss today.
And Raghuram Rajan, in a conversation with Rahul Gandhi, says that India may need to provide 65,000 crores to protect the livelihoods of the poor. He also bats for more testing and a clever approach to exiting the lockdown.
All right, so those were the top stories. Let's talk about the top stocks that we've been tracking this morning. But it's always the financial stocks which have been in focus. Ekta, on Lupin, what do you have for us?
Well, Lupin is in focus because they've received an establishment inspection report with a VAI status, which is basically a voluntary action indicated status for their Pithampur Unit 1. Now, remember that this Pithampur Unit 1 was inspected in Feb of 2020, from 3rd of Feb to 11th of Feb, and it had at that point in time received 2 observations. So this is largely a normal course of business for Lupin, and it means that they will be able to continue manufacturing, getting approvals from this particular facility.
Okay, well, thanks for that, Ekta. So some baby steps are being taken by the entire, pharma industry to make sure that some COVID drugs come on board. We heard from Gilead as well. But on that note, even Glenmark is in focus this morning. Ekta, take us through the latest developments there.
Well, yes, Glenmark continues to be a stock in focus today as they've received approval from the Drug Controller General of India, the DCGI, to conduct clinical trials for the antiviral drug favipiravir for COVID-19. Now, remember, favipiravir is already an established drug which is used for influenza in Japan. It was earlier made for Ebola, and now it is being used for COVID-19 patients. There are clinical trials which are being conducted in Japan, in China, as well as in the likes of the US as well. So Glenmark is now going to conduct clinical trials on mild to moderate COVID-19 patients, around 150 patients in India, and the clinical trials are expected to last for 14 to 28 days. If they manage to succeed in these clinical trials, then they'll be able to launch the generic version of this particular drug in India. Separately, companies such as Strides have also started exporting this particular antiviral drug to 3 Gulf countries. We saw the news come out yesterday. They're also looking at the Indian markets. Smaller companies such as Lassa Supergenerics is also looking at the development of this particular drug.
All right, thanks Ekta for that. Well, Just Dial, there's some news flow that the board has gone ahead and approved the buyback at up to 700 rupees a share. The stock actually has seen a huge run up in the last many days. In fact, this afternoon as well, the stock is up almost about 2.5%, but at a maximum price of 700 rupees a share is what the board has approved the buyback for. It's a buyback of 31 lakh shares via a tender offer. But Mangalam, you have a couple of more stocks on your radar this afternoon?
Absolutely, a handful of stocks, Sonia. We start with Polycab, where they've informed the exchanges that the board will meet on May 2nd to consider an investment or acquisition of shares. Now, whether these are acquisition of the company's own shares or investment into another company, we will have to wait till May 2nd for that. No clarity given on this. The other stock that I'm watching out for is Punjab and Sindh Bank. Yesterday to the exchanges, they informed that they're going ahead with a 500 crore QIP, or the board will mull this. And banks getting money at this point, definitely a positive news coming in. So while the stock is just a 15 rupee stock, we have seen a bit of an up move out there. And the third group of stocks that I'm watching out for are the liquor stocks. Not so good news coming in from Rajasthan, where the state government has increased excise duty on liquor by about 10 percentage points. So bottles which cost more than 900 rupees a piece will attract an excise duty of 45% as against 35, and bottles below 900 will see an excise duty of 35% versus 25%. The stocks are moving higher right now because we've seen big corrections earlier as well, and the market's doing well. But the big concern is Rajasthan, while it's a small contributor, let's see whether the other bigger states go ahead and follow suit as well or not. And if that happens, then it could be a negative for the volumes of these companies. Okay, well, you've heard the joke, right, Mangalam? Forget about alcohol stocks. Where is my alcohol stock? Because in this lockdown, nothing is available. So I guess that's creating a bit of disappointment for people as well. But moving on, Hexaware is one stock on our radar for sure, because we did speak to the management of Hexaware a while back, and the information from them was not good. In fact, they said the decision making has slowed down quite a bit amongst corporates, and they expect Q2 of calendar year 2020 to be worse than Q1. Things will only improve in the second half of the year. Listen in.
The next quarter, April, May, June, will actually be worse than the current quarter. And it will get worse before it gets better. We will start seeing recovery from Q3, but it's going to be a staged recovery. We don't think all of our customers' industries will recover in the same path. There will be some that take a V-shape, some that take a slower V, some that will take a much longer time to recover, U or even L. So it's going to be a mix of these, and we think in aggregate, hence, we will be back to current levels in 3 to 4 quarters.
All right, well, let's do one thing. That's the management of Hexaware. Things not looking so good. In fact, client spending has reduced and things could get worse in the next 2 quarters. Normalcy will only return after 3 to 4 quarters. It's important to know that. Well, let's do one thing. Let's take a quick commercial break on that note. On the other side of the break, Rajiv Gandhi of Hester Biosciences will join in to give us an update on the business. Stay with us. Well, the going is very strong, I must say, for the Nifty and the mid-cap index right now. So high point of trade, 9863 is where we're at, 3.5% higher, and a triple century, as Mangalam was referring to it earlier. In the mid-cap space, a lot of stocks are buzzing around. In fact, Bharat Forge is now up 12%, Federal Bank is up almost about 10-odd%, and something like an M&M Finance is also up about 6-odd%. So that whole space, autos, auto ancillaries and financiers are all doing pretty well. But everyone is just waiting to hear about any kind of drug or vaccine to do with the COVID-19 outbreak. We have the management of Hester Biosciences who joins in now, Rajiv Gandhi. He's going to speak about how IIT Guwahati and Hester have collaborated or are going to collaborate to work on a vaccine for COVID-19, and that's something that the street is eagerly waiting for. Rajiv, thanks so much for being with us. Can you tell us a little bit about this tie-up with IIT Guwahati for the vaccine? Where has work reached so far, and how long will it realistically take before a vaccine comes on board?
Yes, as you are aware, Hester has tied up with IIT Guwahati. The genesis of this tie-up was that we have been working with IIT Guwahati for more than a year on other animal vaccines, and they had already done some work on the COVID-19 human vaccine, and that is how it happened that we discussed and we decided to work together. So as things stand right now, they have already taken the work up to the next level, wherein they would be constructing the virus, and after the virus is constructed, it would be given to us, on which we shall then make a trial batch, do the animal trials, and then take the human trials. So that is where we are at this point of time.
Okay, so if you can give us any kind of realistic timeline on how long the human trials would take. Are we looking at 3 months? Are we looking at 6 months? And how do you plan to fund this entire process?
In terms of timeline, what we have committed that our animal trials would start by the end of the year. This is sort of an extended timeline that we have mentioned, but we hope to start it a little bit before that. In terms of human trials, at this point of time, it would be difficult for me to give a timeline. We are talking with the drug authorities itself, and we are trying to understand the process on how to take these, the vaccine for COVID-19 ahead. Normally, as you would be aware, a vaccine takes quite a few years, but the Indian government and world over, they are looking at how soon can companies develop it and take it further. So we are just talking on it, and it would not be appropriate for me to give a timeline point of time.
Well, Mr. Gandhi, while it is not appropriate for you to give the timeline of the same, if you could explain to me the rationale behind going ahead and telling the exchanges that you've done this and not saying that perhaps the timeline is, it's difficult to calculate how long it will take, or even give a sense of clarity to the exchanges. Because what happened yesterday was, after this announcement that you made, we saw a big surge on the stock price. So maybe some believe that you're pretty close to, cracking something. That hasn't happened. Why weren't you very clear in the communication that you made to the exchanges at that point itself?
To address that issue, we have been as clear as possible in our press note. And if you are looking at, this is an R&D project, and this is in R&D stage with most of the companies that are doing it. Out of 70 companies that are doing it, we are nothing different. I don't think anybody has committed a firm timeline except one or two probably. And it would, while things are moving fast at our end, let 1 or 2 months go, and then we can probably give a little bit of a better time in a commitment. It's not that we are far. It's not that we are saying that it will take 2 years, 3 years, 4 years. That's also not that we are saying at this point of time. Let each process give its result, and then we can give you a precise timeline. I don't think so. We have even been non-committal or anything of that sort.
Right. If you could tell us about your experience with human vaccines in the past, what have you done in terms of vaccines for humans?
We have been an animal vaccine company, and we have been producing vaccines for now more than 20 years, and we have been producing vaccines from all the processes from which even human vaccines are manufactured. So we have the technical capability to produce a vaccine, whether it is a human vaccine or an animal vaccine. There is no different standard for a human vaccine or an animal vaccine except for the testing time and the release, which is of a regulatory nature. So we have the expertise to make vaccines. There is no past.
So in terms of either technology or
yes.
Sure.
Yeah. We have not produced
we got that.
human vaccines,
so in terms of technology or R&D or cost, you won't have to make any additional expenditure?
No, we will of course have to make additional expenditure. We are ready with the financial planning internally, which we would unfold in the next 1 or 2 months, and we are absolutely ready. If you see, we have also taken permission to raise finances at Ester Biosciences, so everything is in place, but we would want to mention it at an appropriate time, which then at that time, we do not delay, or then we don't give any date which we are not able to keep.
Okay, so just one final question, because everyone's eagerly awaiting some drug or some vaccine to do with COVID. I know it's difficult for you to give a timeline, but given how you have been a part of these processes in the past, do you think one can realistically expect some vaccine in this calendar year itself?
In this calendar year, at least not from us. I would not be able to comment on others who have taken up this for manufacturing.
And finally, before we let you go, one question. A lot of people are worried about non-COVID related business going down for them. So how's business been for you, especially for your animal business?
We are producing animal vaccines, and our sales have been low in this month. Our plant has been functional because we come under life-saving essential commodities, being vaccines, which are needed for poultry, cattle. Our sales have been low, and we have been impacted, but I think that's the way it is for all of us at this point of time. I think we would be touching approximately 70% of our target in this month.
All right, Mr. Gandhi, thanks a lot for joining in. Wish you good luck with finding the medicine and the vaccine for coronavirus, not just for your company, but for the world at large. But we'll stick with the pharma theme itself. Local and global pharma companies have given rise to hopes of finding a cure for coronavirus. Biocon plans to repurpose their psoriasis drug for COVID-19. Ekta joins in with more details. Ekta.
Yes, Biocon is in focus. The company, in fact, is looking to repurpose one of its existing biologic drugs for psoriasis, itolizumab, to treat COVID-19. Now, remember that this particular drug was licensed way back from Cuba, and in fact has now been used in Cuba for patients to treat COVID-19 and has shown positive results. Separately, Biocon is also looking at a drug called Cytosorb, which is used for sepsis, which may also help in reducing mortality. And the drug has been licensed again from the US, from a US company, and it was recently approved by the US FDA to treat COVID-19. The company is also looking to collaborate with US companies to develop vaccines. And separately, Syngene, which is basically Biocon's R&D arm, is looking to work on an antibody test as well as a PCR-based diagnostic test for COVID-19.
All right, Ekta, thanks a lot for that. So let's now listen into what Kiran Mazumdar-Shaw had to say about the possibility of Biocon repurposing their drugs for the COVID-19 treatment, and also how the rest of the drug trials are underway.
Remdesivir has just reported some promising data, but it's not a magic bullet, as you know. We are joining this effort by repurposing our own itolizumab, which is a anti-CD6 antibody which has been approved for psoriasis, but it also has a very good effect on the cytokine pathway, where it actually does have an effect on down-regulating what we call as cytokines, and it has an anti-inflammatory effect. So the combination of the two is likely to help in dealing with the cytokine release and the inflammation that we see in COVID-19. this point in time, I don't think patents are going to be enforced. Gilead has already got a model of licensing, licensing without a patent fee. So I think those kind of models have been used in the past in India, where many Hep C drugs, antiretrovirals have been produced by Indian companies for the developing world markets. And I would assume that the same would hold true if remdesivir is required.
All right, with that, we'll slip into a short break with the news that the Nifty is closing in on that 9900 mark. Come back, we get chatting with Pritesh Mehta of US Securities. He will give us some trading strategies. Welcome back. You're watching Halftime Report on CNBC-TV18. Let's get in a market opinion. We have Yu Young of Aberdeen Standard Investment this morning as on the COVID crisis, as well as how best to navigate these uncertain times. Hear him out, and we'll be back with Pritesh Mehta.
The markets at the moment are a bit out of sync with economic reality. They don't necessarily follow in lockstep, of course. But over the long term, yes, markets ultimately follow underlying earnings for the companies that constitute those markets. And it seems, I don't want to pour water on the rise, but it seems in many ways that the rise we've seen is certainly not justified by fundamentals, and that we have to really await the outcome and the effect of what we're seeing in the real economy on corporates and the effect on many corporates worldwide. The difficulty, of course, over recent years has been the valuation on the quality players within the financial sector. So the HDFCs of this world have certainly historically traded at a very rich valuation. And they've come back down to earth a bit, but I think are still the right place to be long term. The Nestle's, the paint companies, and there's some pretty stratospheric valuations. And of course, India should provide a lot stronger growth over the next 10, 20 years or more. And one could argue that if one holds them for 4, 5, 10 years, today's valuations won't appear as frightening. And I think in many ways they've been a place of refuge for investors, particularly like the likes of Nestle, Lever, which in theory, even if the effects of coronavirus are severe, I mean, again, it's an area we've had long-term exposure to, companies like Sanofi and the likes. So it's a bit like the other stocks we've been talking about, good long-term growth prospects, but not particularly cheap valuations. So it's an area where, yes, we have periodically added to on a stock-by-stock basis, and it's an area to which we again, as a long-term investor, really want good long-term exposure.
Okay, that's the word coming in from Yu Young. If you heard him correctly, he did say that, the markets have run much ahead of the economy and the economic damage could take some more time to play out. So better to keep some powder dry. By the way, there's some important information coming in on your screen and we'll try and get Lata to speak about this. SIDBI has presented a plan for an emergency credit line to all MSMEs with loans under 5 crores. We know that pocket has been hit the most. MSMEs could get 10 to 15% of normal working capital as an emergency loan. This will be a huge relief for many of the medium and small enterprises. But we'll talk about that in greater detail in a bit. For now, Pritesh Mehta joins in to give us some technical cues on the market as well. Pritesh, hi, good morning. It's turning out to be a very good day. But at this point, would you advise profit taking on the index or would you let your positions run because we're entering into a long weekend as well?
See, there are two ways of approaching this market now. When it comes to about index, I think around 10,000 we should be looking to book some profits because we have seen a strong run from 8,800 to current levels. but we have to be very selective when it comes to stock and sectors, because earlier in the month we saw FMCG and pharma participating, and thereafter there was a strong rotation. We saw banks, financials, auto participating. Now metals are all in the thick of action. So yes, it is now properly distributing your strategies. No need of sticking to the pharmas and FMCG, because they have had their run a couple of weeks back. Now it's time to focus strategy and move into something which is not participate at all. So this is what we have been recommending to our clients. And in terms of trading ideas, we like Havels. The stock marked a low around midpoint of previous scan channel around 480, 485. Thereafter, stock has been moving higher. On PNF chart, we can say a bad trip, follow through pattern coming in, double top buy pattern is seen, and also setup has turned bullish, which tells me a target of 595 is on the way. And second recommendation is buy on Ujjivan. Now see, we saw sharp collapse in plenty of financials name, and Ujjivan was certainly a part of it. It corrected from 350 to 150 odd levels. Now we have seen the stock stabilizing above the GAN number of 169. I can see a triangle breakout taking place on pointed figure chart, a probable ABC encounter also. So I think that we can see the run up towards 210 in this counter as well.
Right, Pradesh, thanks a lot for that. Havels and Ujjivan are his buy ideas, believes that profit taking around that 10,000 would be prudent. With that, we slip into a short break with the news that Reliance Industries stock at the high point of the day ahead of its fourth quarter numbers. Come back, we'll tell you what the street is expecting from all the verticals of this company on the other side. Welcome back. You're watching Halftime Report. A big day for earnings. Big boy Reliance will be announcing its results for the fourth quarter. Sonia, first up, tell us what are the overall expectations?
Well, for Reliance Industries, as we know, Mangalam, it's going to be a slightly weaker quarter on a consolidated basis. That is because the core oil and gas segments have been under pressure, particularly the gross refining margins will be down about 15% on a quarter-on-quarter basis. We are expecting $7.8 a barrel. That's much lower than the $9 plus that we saw last quarter. On the petchem side of the business as well, there'll be some amount of stability, but the weakness in the core oil and gas business will be offset by the strength that we see in RelGeo and in Reliance Retail. So overall, the numbers should come up for you on your screen. We're expecting revenues to fall by about 4% quarter on quarter. That's the overall standalone numbers that I'm expecting. Revenues down 4%, EBITDA down 4.6%, OPM at 14.5%, and profits down 7.8%. I do want to talk about the RelGeo business because the earnings are expected to be very strong there. The EBITDA should improve because of the tariff hikes that were undertaken in the quarter gone by. That will result in an average revenue per user rising 4.6% quarter on quarter. Subscribers are also expected to rise by about 3% quarter on quarter, and that will lead to an EBITDA for RelGeo going up 13% quarter on quarter. But as we know, the retail business and the RelGeo together form a huge chunk now. So Mangalam, over to you. Retail is also expected to look good this time?
Absolutely, retail is expected to look good this time. But before we talk about retail, let's talk about the petchem arm of the business. Sonal is here with a preview on what one can expect from the pet. Okay, we'll go to Sonal in a bit. Petchem business is something we will talk about in a bit. But right now, retail, it's been in focus because of the Jio Facebook deal, pilot rollout of JioMart, and the impact that everyone will be watching out for in terms of the lockdown that was announced on account of coronavirus. But for what it's worth, in the fourth quarter, the lockdown impact was just there for the last 15-20 odd days. So, the quarter is likely to be good year on year. We'll see a 20% growth, 44,130 130 crores what the street is expecting in terms of revenue. The operational performance is likely to improve a little more. Over the last few quarters, we've seen how Reliance Retail EBIT has improved, margins have improved. So this time around, we're working with a 5% sort of margin year on year. However, quarter on quarter, because of the coronavirus impact, we're likely to see a bit of a dip. So QOQ, our revenue expectations are, that it will decline by about 3% and the net EBIT itself will decline by about 7.5%. We will keep an eye out on how, the company goes and navigates through this lockdown tension and what sort of growth rate it can post once the pilot of JioMart is successful or not. Growth was strong in Jan and Feb. The impact will be relatively more in the first quarter, not as much in the fourth quarter. So that's about Reliance Retail.
Okay, so that's about Reliance Retail, but let's just get a quick look in on what's happening in the market, because that's where all the action is right now. The Nifty Bank is now advancing towards almost a 900-point rally, and that's substantial. I mean, it's 750 points. It's come off a little bit from the highs, but still holding on to a massive chunk of its gains. Tata Motors, I just want to speak a little bit about that, because Tata Motors is up 12.5% right now. There is expectation that production, or rather demand in China, has come back in a staggered way, but still come back. So in hopes of that, Tata Motors is rallying at the moment. It has a couple of these other auto stocks for company as well. Hero MotoCorp is also up about 8%. And then once again, the day belongs to the metal space. So Hindalco, Vedanta are both up about 6 to 7%. On the downside, some profit taking seen in the traditional gainers. So HUL is down about 2.5% ahead of earnings. Sun Pharma is down about 2.5% as well, and Asian Paints is a tad bit in the red right now. So these are just a list of gainers and losers at the moment. Apart from that, in the broader markets, Hexaware, after the negative commentary from the management where they said that things are going to be weak for the next 2 to 3 quarters, Hexaware is under pressure. But let's go back to talking about the big story, which is Reliance Earnings that comes out later today. My colleague Sonal is here to tell us about the weakness that we can see in the core oil and gas business. Sonal, over to you.
Thanks a lot for that, Sonia. As you rightly pointed out, the core business this time around is expected to be weak, especially led by the refining sector. So in terms of Singapore GRMs, they have already fallen to levels of $1.2 per barrel versus $1.7 per barrel on a sequential basis, and that is something that will be reflected in the refining GRMs for Reliance, which are expected at around $7.8 per barrel, which is a 15% decline on a sequential basis. Now remember, demand has been low, and that's why the cracks for gasoline, jet fuel, all of them have declined substantially on a quarter-on-quarter basis. That's why there's an expectation of almost 38% decline in EBIT this quarter to come in at around 3,800 crore rupees. Moving on to the petchem segment, in comparison to refining, it's expected to be quite resilient. We're expecting a decline of 4% on the EBIT side. That is because while the oil prices were low, the demand for these packaging materials have gone up, and some of these products have seen increase in spread, something like a PPP. All these products have done well this quarter. That's why in comparison to refining, we'll see some resilience as far as the petchem business is concerned. Back to you.
All right, so that's about Reliance, a comprehensive preview of what one can expect. Of course, the street will be keeping an eye out on the details of the rights issue as well. With that, we'll slip into a short break, come back. On the other side, we'll get you a conversation between former Congress President Rahul Gandhi and the former...
Welcome back. You're still watching Halftime Report on CNBC-TV18. The financial space is doing very well right now, and one of the reasons could be what we just flashed for you a while back. Sources to CNBC-TV18 have indicated that SIDBI has presented a plan seeking a government guarantee for an emergency credit line to medium and small enterprises, which is, I guess, the need of the hour, as we all know. Lata is here to give us the latest that she's picking up. Lata, over to you.
Well, it's the season for making proposals to the government, but this one is very important because it's close to the government's heart. MSMEs, and we've already heard Mr. Nitin Gadkari speak about it. Now, sources close to SIDBI have actually given us this plan itself. I have the entire plan, the doc. It says that the government should guarantee 10 to 15% of emergency loans. Now, 10 to 15% of what? Of a normal working capital of MSMEs. So they have two categories, those under 1 crore working capital and those under 5 crore working capital. For under 1 crore, the plan is that 15% should be given, and it should be completely guaranteed by the government. For the under 5 crore guys, 10% of their normal loans should be given as an emergency credit line, and that should be fully guaranteed. According to the plan, it won't cost the government much. They believe that the total loans given to MSMEs in the country is 16 lakh crore. So if you want to give them 10% credit, you need 1.6 lakh crore. What the government needs to give in the fund is 16,000 crore. SIDBI or whoever is the agent and the SPV can go to the market, and because there is a sovereign guarantee, they can borrow from the market 10 times. That's the normal leverage. Then 16,000 crore becomes 1.6 lakh crore and the scheme can start. Assuming a 10% default NPAs, the government may lose the 16,000 crore almost over 3 years. That's not a great deal. You're losing about 5,000-6,000 crore a year. It's not a great deal for the government to protect all NBFCs. Only thing is that money should be used to pay salaries. The conduit should ensure that, whether the conduit is NBFC or SIDBI or an MFI. But the more important one is what commercial bankers told me when I gave them this plan. Some of the largest bankers told me that what they have gone to the government with is a 25% guarantee for the loans they give smaller entities. And by small, they want it scaled up, not 5 crore. They want it for loans under 300 crore. Largely, they want to include even microfinance and NBFCs. Their point is that bankers really, they have money, they have liquidity, but they don't have risk appetite. They can't stomach more NPAs on their balance sheet. So a 25% guarantee should be given by the government. And in all probability, maybe only 10% will turn NPAs. But if you don't give the guarantee, chances are that there will be a lockdown of the financial system, even if the lockdown on the economy is lifted. And that's why they believe that even if it's a 25% guarantee, it should be given by the government.
All right, Lata, thanks a lot for that. So those are recommendations. Whether the government goes ahead and accepts them, complies with them or not is the big question. With that, we move on to our next story. Some important lessons on how to approach the economy post-COVID-19 crisis. Congress leader Rahul Gandhi quizzes former RBI Governor Raghuram Rajan on the same. Let's take a look at that conversation.
Clearly, something has gone wrong with the global economic system. I mean, that's pretty clear, right? Would that be a fair statement?
I think that's a fair statement, that it's not working for a lot of people. The growing inequality of incomes and wealth in developed countries is certainly a source of the concern. The precariousness of jobs, the so-called precariat, is another source of concern. You have these gig jobs without any sense of whether you will have income tomorrow. And of course, we've seen during the pandemic, many of these people don't have any support. They have lost out on both incomes as well as their safety net. Therefore, what we have today is both a problem of slowing growth. So we cannot dispense with markets. We do need growth. But we also have a problem of stuck or inadequate distribution. People aren't getting the fruits of that growth in the same ways. Many people are being left out. And so we need to think about both sides. And that's why I think rather than focus on distributing output, distribute opportunity.
All right, distribute opportunity rather than distribute output. That is the word coming in from Raghuram Rajan. With that, we'll step into yet another short break, come back and we get cracking on the commodities arena with Manisha Gupta.
Hi, welcome back. You're still watching Halftime Report on CNBC-TV18. Let's get a handle on what's happening in the commodity space. This morning, in fact this afternoon rather, oil prices have surged quite a bit amidst early signs of some fuel demand recovery in the US. But Manisha Gupta, commodities editor, is here to take us through the details. Manisha.
Sonia, thank you for that. Well, yes, the crude oil prices have been working well, so is the metal space. But I'm looking at the gold prices right now, which actually clearly have been your winner until now in 2020, up by nearly 12% in the global markets and up nearly 20% for the Indian markets as well. But what we are discussing today is the World Gold Council report for the quarter gone by, and it says that the global investment demand for gold is up 80% in Jan to March quarter, while the Indian investment demand has seen a decline of by 17%. These are year-on-year basis levels, of course. But joining us to talk further about that is Mr. Som Sundaram PR. He's MD World Gold Council India. Som, hi, welcome to the show. These are uncertain times, and the gold prices have been keeping up to its safe haven reputation. But the Indian investment demand, how do you read that? What are the patterns that you've seen emerging out of India?
Well, quarter one has actually seen a sharpest drop in 11 years. Both jewelry, of course, has been the worst hit, and even bars and coins, which is what we call classically as the investment gold. Although in India, both jewelry and bars and coins are both investments. But both have seen a significant drop. China, of course, has seen a sharper drop because the lockdown in China has been longer for the quarter. Going forward, Manisha, it's going to be more about, bars and coins whenever the market opens up, or maybe plain jewelry, because at these prices, people would like to get as much gold as they can. And bars and coins obviously come at a lower conversion charge. Okay, so the expectation is that as and when it opens up, given the high prices, and also the fact that weddings are all getting postponed, but people would still like to keep gold, I think bars and coins will be the first, what I would say, point of acquisition. And then, of course, the standard jewelry will come, but we think that bars and coins and even ETFs will see a positive turnaround faster than jewelry.
How are you comparing the global trends, Som, vis-a-vis India? Because we've seen a stronger ETF demand. The investment demand has been on the higher side as well. Well, yes, when it comes to demand for jewelry, bars and coins, all of that has seen a decline. But the Indian markets have seen a decline on every sphere except the recycled gold. We've talked about that earlier as well because of the high prices. Most people wanted to bring in their old gold in exchange of the new one. Are you looking at the Indian trends changing as well? Do you see a pattern where ETF buying has picked up, or the investment demand will be seen higher in sense of physical buying?
Right now, Manisha, I think the market is completely shut. Even ETFs, how will they source gold in that sense? So entirely logistics has brought everything to a standstill. There's a little bit of transaction happening on the digital front. Some of these digital platforms are probably selling it because they have certain gold which they're trying to sell. And maybe even jewelers have sold things like gold certificate, probably locking in the gold price rather than really selling the gold. But there is really no movement. So logistics has completely curbed the industry right now. And and when the lockdown, business starts coming back to normalcy, we will see mostly, the ETFs and bars and coins. And as I said, probably standard jewelry coming in. So, but we don't know when it is going to be. As of now, everything is shut. And how long can we be selling gold certificates? So that's also a point to ponder.
Absolutely. So, I was reading your report, and it says that India is back to be the #1 consumer in the previous quarter. I do understand it's not because India has bought too much, it's because China has bought too less. But as we get into the new quarter, do you see the Chinese recovery coming back?
Well, yes, what we hear from reports is that because nobody is traveling and we don't can't assess the on-the-ground situation, but it looks like China's markets are opening up a little ahead of the other markets. So you might see demand from China coming back if that continues. But, for us, in any case, we have lost Akshaya Tritiya. and the lockdown, it looks like, is not going to be there. It's not going to open up at least jewelry sales in May. So, and then we enter the monsoon season when generally don't buy gold. They will rather recycle gold, for their thing. So we might see any pickup only in Q4. So till that time, we are going to see two uncertain quarters, and maybe you'll see that China is definitely back because their markets, they don't have this seasonality. So you might see China certainly ahead of India.
So my final question, I understand that you are not going to quantify the demand for 2020 given the kind of uncertainty that we are dealing with, but what's your sense on the buying pattern? Because everybody we speak to tells us that 10 to 15% of your portfolio should be in gold. Do you see world markets as a whole adhering to that?
Yes, certainly there is a lot of interest. You're seeing the ETFs, essentially. Quite a lot of it is strategic, tactical investments are flowing in. I think that sentiment will be carried through. Whether people buy it as jewelry when they have a little money and say that it's better to keep in gold. So these decisions might change, but ultimately people are going to think, if I have a certain amount of money, where do I put that money? So you will see more allocations to gold, whether it be households or investment institutions. But how much people are able to afford is a key question in the consumer markets. 48,000, 50,000, affordability comes into question, particularly when you have income anxiety. So that could be a headwind for India, China, other markets. But you will see that overall sentiment is a greater allocation to gold during this period. That's absolutely clear.
Well, yes. Yes, not as a jewelry, but as a allocation or as in a portfolio in sense of a financial asset is how gold perhaps seems to be finding its place right now. So thank you so much for joining us. So Sonia, clearly people may not buy jewelry, but they might buy gold in ETF and bars and coins, ensuring that it's part of their portfolio, not so much as jewelry.
Okay, well, that is if people have the spending power, right? No one knows what the economic damage is going to be with so many weeks of the lockdown. But be that as it may, thanks a lot, Manisha, for joining us and giving us an update on the commodity market. By the way, in equities, the market has come off a tad bit from the highs. So 9889 was the high that we hit on the index, and 9827 is where the market is right now. So it's about a 60 points off from the high point of trade. You could expect perhaps the second half of trade to be volatile, considering that we're going into a long weekend and there's been so much data flow. From Mangalam, myself and the entire team, thanks so much for tuning in. But don't go anywhere. Lots coming up on our next show, Business Lunch.